Hello traders, welcome back. It's time to decode one of the most common and important term in forex, the pip. If you've ever heard I've made 20 pips, my stop loss was at 30 pip, and you are not sure what that meant, so this video will make it crystal clear. So to begin with, I'll first define or explain what a pip is. So what exactly is a pip? A pip stands for a percentage in points or price interest point. Pip, P-I-P, pip. So it represents the smallest price movement that a currency pair can make. For most currency pairs, a pip is the fourth decimal place. I want to go slowly by slowly so that you can get, because we are now getting to a little bit of mathematics. Let's take Euro USD as an example. And if Euro USD moves from 1.1000 to 1.1005, that means it has moved 5 pips. So some currency pairs, those involving the Japanese yen, only go to 2 decimal places. For USD JPY, if it moves from 130.00 to 130.50, that's 50 pips. So you're getting how the pips are coming. The last movement minus the first movement, where it is stopped minus where it began. So if USD JPY, it moves from 130.00 to 130.50. So to get the number of pips it has moved, it's 130.50 minus 130.00. And that's how you get the 50 pips. So why pips matters? Pips help us measure profit and losses. Again, remember we said a pip stands for the percentage in point or price interest point. The smallest price movement. It's the smallest price movement. So by that you are going to measure profit and the loss. The pip will help us measure profit and loss. So let's say you are trading Euro USD and you enter at 1.1000 and close at 1.1050. That's a 50 pip gain. I know by now you are getting where the 50 pip is coming from. If you had $1 per pip, if you traded $1 per pip, you just made $50. So if the trade went against you, you'd lose $50. Pips also help us set the stop losses. That is how much you're willing to lose. They help us also set up the take profit, that's the target you want to gain, and even calculate your risk to reward ratio. Another example of pip calculation is, break it down in a few examples, about 2 examples. I think that will be enough for now. Example 1 is Euro USD. You buy at 1.1200 and sell at 1.1250. That will be 50 pips. You get 50 pips. That is 1.1250 minus 1.1200. You get the 50 pips. If you trade one lot, 1 pip is equals to $10. That's 500 gain. Another example 2 is USD JPY, and you sell at 145.00, buy back at 144.50. That's 50 pips. And if 1 pip is equals to $1, that's $50 profit. I hope you're getting the how you calculate the pips and the profit. After this, I'm hoping that you'll be able to do so by yourselves. Also, know your lot size, your pip value, and your stop loss before entering a trade. That's risk management. So what are fractional pips? And you might notice brokers quoting prices with a 5th decimal. For example, 1.10003. The last digit is called a fractional pip or pipette. 1/10 of a pip. So 1 pip is equals to 10 pipettes. Most traders ignore pipettes when calculating risks. It's good to know. It's good to know so that you can be able to do your management, your risk management with efficiency. So now you know pips are the heartbeats of forex trading. Every gain or loss, every decision, every calculation comes down to a pip. I'd like to give another example on calculating your pip. For example, you are calculating the Euro USD. You buy at 1.1200 and sell at 1.1250. So again, as I had said earlier, you take the last movement, which was 1.1250 minus where you began, where you entered your trade. You entered your trade at 1.1200, and by that you get 50 pips. The second example was SDJPY. You sell at 145.00, you buy back at 144.50. Or you'll get the number of pips you have calculated is 144.50 minus 145.00. That will be 50 pips. Go open a chart, calculate the pips and know how much you'll have earned. In the next video, I'll share the top 3 free resources that help me learn Forex without spending a shilling. And thank you so much for watching. Let's keep learning together. Bye.